I went back to look at these same periods in the election years and all of this. Basically, the market goes bananas all the way until it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in.
Real Vision founder and CEO Raoul has expressed optimistic expectations for the cryptocurrency and digital assets market, predicting that the 2024 to 2025 bull run will mirror the explosive blow-off top cycle of 2016 to 2017 rather than the subdued bull run of 2021. A blow-off top is characterized by a sharp and dramatic rise in asset prices, fueled by extreme euphoria, speculation, and risk-taking. The 2017 cycle exemplified this, with Bitcoin surging from around $1,000 in early 2017 to nearly $20,000 by December, a nearly 20-fold increase, while the total cryptocurrency market cap skyrocketed. In contrast, the 2021 bull run faced significant headwinds, including China's mining ban, heightened regulatory pressures in the US, and environmental concerns surrounding Bitcoin mining. These factors led to sharp corrections and price volatility, ultimately stunting the market's growth. However, Powell points out that many of these challenges have since eased. While China's official stance on cryptocurrency mining remains unchanged, experts note a shift in rhetoric suggesting acknowledgement of crypto's global economic importance. Additionally, the recent election of the first pro-crypto U.S. president has bolstered optimism in the industry. In a discussion with Canary Labs co-founders OSF and Remando on the Real Vision YouTube channel, Powell elaborated on his outlook for the ongoing bull market. He expects this cycle to culminate in a blow-off top, driven by renewed investor enthusiasm and reduced regulatory constraints, setting the stage for significant and sustained growth in the cryptocurrency space.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
Yeah, I mean, look, seasonally it happens. Almost whoever wins the election, using the everything code cycle, we're in the peak kind of debt refi cycle, so you need liquidity to come in. I actually did the maths in Global Macro Investor over the weekend. China's added $8 trillion of liquidity via both state sector and via M2. I mean, people don't realize. So liquidity is back. Everything was in place. And then we've got this other thing, which we'll talk about how the cycle plays out, but we've taken the big overhang off, which is like who's allowed to do what. And, that is a big deal. And there has to be a re-rating, not just on liquidity, but a potential re-rating of the sector. So it's a big deal.
How long do you think it takes for that to show through in markets? Like, is there like a lag time?
Well, I don't know, because, traditional markets, they tend to sort of forward price it as soon as it gets to the news. Then you get, a corrective period. But because the flows won't come until the new year, right? And we don't even have a new government in. So really the flows don't come until later because you actually need to see the regulators. It's not like Goldman Sachs can go, oh, great, Trump's in. We're all free to do what we want. They won't. They will have to wait until we're given new regulation, etc. So it kind of increases the odds for me of a larger 2017 style year-end rally next year, as opposed to the stunted cycle. Now, it depends because the Fed trumps all. If they remove liquidity earlier in the cycle, it's game over. So there's this balance here. But I think there's the potential for the blow-off cycle top because it allows other people to come in. Every time we get to this point in the cycle, Bitcoin dominance collapses. Risk-taking, and now with the new government, risk-taking is going to be rising. Also, the other thing that I found the main driver of alts versus Bitcoin, so i.e. the inverse of dominance, is actually driven by the ISM survey. Business cycle makes sense because if the business cycle starts going more positive because it's been very lackluster, what we tend to find is that risk-taking increases because people's disposable income goes up their businesses earn a bit more money. Everybody feels a little bit better. And that drives the same as small caps versus large cap outperformance. It's basically the same trade. You see it in credit markets as well. It's all the same trade. So it's perfectly set up for that now. All of our forward-looking indicators suggest that the ISM from here starts climbing above 50. 50 is the really big signal for the alt scene. Also, if we go back to 2020, it was exactly this time that ETH started properly outperforming. It's again the same point in the cycle. And if you play through, and I wrote a thread on this yesterday, is ETH is where institutions will build, whether it's on layer ones or layer twos, but that's where DeFi is. That's where institutions are not going to get fired for. It's the kind of Microsoft of the space. So I do think as regulation frees up, ETH is going to get a lot more activity people yet understand. So I think it's a good thing. And they've built it for scale. But the layer twos, if there's not much activity going on, then the price doesn't do well. But if you can start bringing the financial institutions onto this space, ETH is the most likely candidate.
First, Bitcoin surges, setting the stage for altcoin season, where chaos ensues as meme coins enter a mania phase, followed by other digital assets like NFTs. While Bitcoin has repeatedly hit new all-time highs this week, altcoins such as Solana, Cardano, Avalanche, and Sway have taken the spotlight. Cardano has risen over 80% in the past week, with Sway up about 60%. Raoul Pal predicts meme coins are next, with Dogecoin already leading the pack. In a recent tweet, Pal said, "We are very close to being in the last chance to add zone in crypto. The next step should be memes breaking out, and after that, there's nothing to do but wait to take lifestyle chips off the table." Pal also cautioned against overexposure to meme coins, advising that they should make up no more than 10% of a portfolio. He acknowledged the explosive potential of meme coins in this cycle but warned traders to manage their risks carefully. Meanwhile, crypto-related stocks like Coinbase and MicroStrategy are signaling the broader momentum of the bull market. Bloomberg ETF analyst Eric Balchunas noted their remarkable performance, tweeting, "Bitcoin mania is taking over the stock market too, as Coinbase and MicroStrategy are both in the top 5 most traded stocks today, behind only Tesla and Nvidia. Both are up an absurd 18% today. Feels like a craze, at least for the moment." In his conversation with Mando and OSF, Pal discussed the ongoing altcoin season, Coinbase breakout performance, and the broader implications for how long this bull run might last. With institutional interest growing and crypto markets heating up, the discussion hints at an intense, speculative phase ahead for investors navigating this cycle.
I put Coinbase as a trade idea. I mean, it's already been it's up 240% in our GMI portfolio and our Macro Insiders portfolio, but I put it on the Real Vision platform yesterday or day before yesterday because it's so obvious. Yeah. Right? It's the toll keeper to all activity for anybody in the largest economy in the world. If you just scroll down, Arthur, there, just show the chart. The chart is, I know, Ovi, you're not a chart guy, but that's a gigantic invert head and shoulders. This is going to La La Land squared.
Yeah, I agree. Like this is the thing that I am bullish on ETH as an ecosystem. What I found difficult is just that ETH itself, just because of the changes that were made earlier this year, just like you need massive scale for that burn to come back. Whereas Coinbase, you're going to see every major US institution pick Coinbase as either a custody partner or to tokenize on base.
There's somewhere between BlackRock and JP Morgan. That's the position of power they have in this new emerging economy. I mean, what a position to be in. So it's currently a $66 billion market. I think this bull market, the whole space will end up being 10 to 15 trillion. So how much is Coinbase worth in that? I mean, it would not surprise me if Coinbase was worth $500 billion.
Yeah. That's crazy. That's $66 billion.
It's insane. It's so cheap.
Mental, isn't it? Yeah.
Yeah. Considering the size of the market that's already there, it's a $2.5 trillion market now. So if the market goes 5x, this probably goes 10x.
Yeah.
Feels, but that doesn't sound stupid. So, I mean, that's a hell of a trade for people. People don't want to trade the cryptocurrencies themselves. I went back to look at these same periods in the election years and all of this. Basically, the market goes bananas all the way until, and then somewhere March, April, there's tax season, and everyone's going to have to pay Uncle Sam and Her Majesty or His Majesty, and they have to start selling a bunch of stuff. That seems to happen every time where you get that a pullback, and then it's going to depend on global liquidity. If it's still strong, then we end up with a strong pump into the end of the year. If not, we kind of get something more like last time. But yeah, I mean, I'm just thinking it's banana zone all the way through till.
Raoul Pal predicts that the banana zone, a crucial phase of upward price momentum, will likely continue until tax season in March. After that, he anticipates a brief cooling-off period before prices pick up sharply again. However, he urges caution, emphasizing the importance of making the most of this immense opportunity. In a recent tweet, Pal described the banana zone as the phase where numbers go up, and the best strategy is often to do nothing if you've already secured your core allocations in top-tier assets like Bitcoin, Ethereum, and Solana. For those with a higher risk appetite, Pal suggests exploring newer chains like Sway or dabbling in meme coins, but he stresses the importance of keeping 90% of your portfolio in solid, reliable assets. This safety net, he says, is key to long-term success. The real risks lie in overtrading, chasing breakouts, or using leverage, which can lead to portfolio implosions. Pal also advises against recklessness in DeFi and urges investors to avoid handing over control of their asset. Instead, speculative energy should be reserved for the remaining 10% of one's portfolio, allowing for smart, calculated risk. Ultimately, Pal's advice is clear: protect your coins and avoid unnecessary risk. With the crypto market heating up, this disciplined approach can help investors navigate the exciting yet volatile times ahead. What are your thoughts on Raoul Pal's predictions for Bitcoin, Ethereum, and other cryptocurrencies? Share your views in the comments below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.